Hey everybody! So welcome to another day of quarantine. And I've been talking for the past week or so about all the ways that you can purchase property without cash or credit. So broke as fuck, shit ass credit, you can still buy a house. Investors, you can expand your portfolio when you're just starting out and you don't have a lot of capital. Or investors have been doing this for a long time and still want to expand their portfolio without using all of their cash and credit. Works for you as well. So today we're going to talk about wrap mortgages. And wrap mortgages is basically a combination of two other styles. So in order to fully grasp this, you're probably going to want to go back and watch the videos on purchasing a house with owner financing and purchasing a house subject to the existing mortgage. Those are the two that we're going to be using here. So when a person owns a property and they're willing to do owner financing on it, they're willing to let you pay it off in terms, and they still have a mortgage on it, we want to be the one to make that payment because we want to be 100% positive that that payment is going to be made. When you leave it up to the owner, there's a good chance they make the payment, or to the seller, there's a good chance they make the payment, but it's not 100% guaranteed. So you want to be the one to make that. So with that, what we'll tend to do is we will make that payment like a sub two, but then we will also be making payments directly to the owner like an owner finance. So let's just use an example. Let's say you're buying a house that you're going to pay $150,000. Their mortgage is $100,000. So $100,000. So to pay that mortgage off, you'll be making the payments on the $100,000 directly to the mortgage company each month. Then you have your other payment, which is going to be however you and that owner divided up the $50,000, whether it's a PITI over 30 years, a PITI for the duration of the loan that you have, or however long the existing mortgage is. So let's say they have 16 years on it, you did 16 years. Or if it's principal-only payments for X amount of time or interest-only payments with a balloon, there's lots of ways that you can structure that, and it gives you a lot of flexibility with how you structure this acquisition. So you're going to make that payment directly to the seller, and then the other one is going to go directly to the mortgage company. So that way you're ensuring that the payment's made and you're not going to pay your seller and they, go to Vegas, whatever. Even though it doesn't behoove them to do that, but things have happened like that. So a lot of times, people just make bad choices or whatever. I don't know. Anyway, again, in order for you to fully grasp, I think, the ins and outs of both of those, your best option is going to be to watch those other two videos. And also, speaking of other videos, you can feel free to subscribe to my page and see all the videos. During this whole quarantine time, I just plan to put out videos as frequently as possible so that you guys can, learn, and so I can have something to do. I'm always really excited to interact with people with your comments, suggestions, what you want to hear about, questions. I also have no problem with, if I have some free time, scheduling quick phone calls and things along those lines. So anyway, feel free to subscribe. And, of course, if you want to share, that's great. And otherwise, just, keep doing what you're doing, being heroes out there. For all you people that are working, thank you for putting yourself in that position to be able, so we can be able to still have mail and still order on Amazon and still get our favorite carryout and still go to the grocery store. Obviously, first responders and people in the medical industry, I thank you guys so much. And for the rest of us who are just sitting at home and washing our hands, rocket heroes. All right, have a great Monday, and I look forward to hearing from you. Bye.